Some numbers that we were waiting for a while. Yes Bank has finally reported its second quarter numbers, and they're flashing on your screens right now. It is a loss of 600 crore rupees on the back of larger tax outgoes. The gross NPA numbers and the net NPA numbers, those are also flashing on your screens. They have worsened as expected. Abhishek's poll had thrown up a loss of close to 600 crores as well, Abhishek, largely on the back of the tax outgo.
The NII is better than our poll. We were working with a number of 2130 crores. It has come in at 2186 crores. So that's a decline of about 9.6% on a YY basis and about 4.2 on a sequential basis. But the other income is very weak. You know, if you look at the other income, it's at 946 crores, down about 36% YY and about 25.7% sequentially. Provisions have declined 25% quarter on quarter. And despite the lower, provisions, the asset quality has deteriorated significantly. The gross NPA has increased 41.7% quarter on quarter. The net NPA in line, increasing about 41.75% quarter on quarter. In percentage wise, now remember that the loan book had shrunk about 1.8% quarter on quarter, so the ratios might look a slightly more elevated than they should actually be. So the gross NPA is at 7.39 when compared to 5.01. We were working with a number of between 6.5 to 7%. The net NPA is at 4.35 when compared to 2.91. So the provision coverage ratio might have slid down a bit, given the fact that both gross NPA and net NPA have increased in the same ratio, while you are seeing a decline in the provisions.
Well, we'll await more fine print. For now, we're now joined by Mr. Ravikant Bhat of IndiaNivesh, who joins us on the phone line. Ravikant, you've seen the number losses in line with what the street was expecting, asset quality worsening. What your first thoughts?
So I think I heard Abhishek read out the numbers. On the core earnings, it does not seem to be a big miss. Though the numbers have come a shade lower than what we had estimated. Of course, I mean, on the bigger miss seems to be on the asset quality. So while we were estimating the gross NPA to increase 6% quarter on quarter, the it's on the higher side. So balance sheet is fine. I think the balance sheet was expected to shrink, and that's happened for want of capital. I think so that if it moved slightly into the negative territory, it might start growing once again. But the bigger miss seems to be on the asset quality.
Absolutely. Asset quality has worsened. Some more details for you, Ravikant, while we're awaiting more analysis. Retail advances have grown about 30% over the last year. Credit cost for this quarter, that stands at 69 basis points. The credit card book, that has crossed 1,000 crore rupees. CASA growth has been good. That has improved to about 30.8% in the second quarter. We're also, still awaiting what the bank has to say on the capital raising front. I mean, yesterday it just disclosed that it has received a binding offer, to invest about $1.2 billion, but the name of the investor had, of course, been withheld. Abhishek, any other details that you've been able to gather?
I'm just working. I'm trying to see the numbers.
All right. Meanwhile, Ravikant, where are you expecting this stress? I mean, we know some of the larger corporates that Yes Bank had an exposure to, very well-known names in public. They have been undergoing stress. But where did the surprise really come from, you think?
No, I think that flagged a few accounts, which total to about 100 billion, of which they were a little sanguine about 250 billion of these exposures, whereas at least in our estimates, we were looking at about 750 billion of slippage is happening out of these identified accounts.
So we also, Ravikant,
just 1 minute. The gross slippages are at 5,945 crore. We were working with anywhere between 3,000 to 6,000 crore. So the gross slippages have come in at 5,945 crore, which compares to an elevated slippage in the same quarter, last quarter itself, which was at 6,232 crores. So, the slippage ratio remains elevated at 10.6% when compared to about 10.55% in the previous quarter.
And we also have the recoveries and upgrades for the bank. That has come in at 867 crore rupees for the quarter. So, Ravikant, like you were saying, gross slippages of almost 6,000 crore rupees.
Yeah, I mean that's 2x of what we had estimated. But again, the way we were going about it was we were actually knocking off the stress book from the net worth. So I think some of this is actually flowing through the asset quality. And if that indeed is the case, then I don't think this is a big negative surprise, since somewhere it did feature in our overall calculations. Hopefully, I mean, this is coming from the stress list, because last quarter I think you had slippages both from double B and below, as well as
Yes.
non-double B book. So as long as this is coming from the identified watch list, I'm still fine. To that extent, the watch list reduces.
Okay, we're still waiting to hear more details on where the 6,000 crores of slippages have come from. As of the last quarter, the bank had maintained that double B and below book at about 10,000 crores. Lalitabh Srivastav of Sharekhan also joins us on the phone line. Lalitabh, a loss of 600 crores, that is on expected lines, but as Ravikant was saying, asset quality worsening, that has been a bit of a surprise for you as well?
Yeah, I think everybody on the street as well was also pretty worried on the asset quality part, and it has actually come across. So credit cost pretty elevated this time, around 16 basis points, and not only that, at a higher credit cost and a subdued provisioning and a very constrained capital position is not something that a good sign for the bank.
Yeah, so as you mentioned, Ritu, the recovery and upgrades are at 867 crores. But if I compare that quarter on quarter, last quarter the recoveries and upgrades were at 1,678 crores. So there is a massive decline of 48.3% on recoveries and upgrades. Apart from that, the credit cost looks elevated.
Lalita, you wanted to comment?
Yeah, see, interestingly, risk weight assets have declined from last quarter. So that was a helpful thing. You see, the growth in the retail side, on the advances side, that has been pretty smart. Retail advances has grown by around 30%.
Yeah.
That one would expect that that along with some of the fund infusion, that helped in the bank expand its CET1 to around 8.7% level. So a very tightrope walk.
Yeah.
That I can see.
Ravikant, if you're still with us, we were hoping to hear more on the capital raising front. This press release again states that they have received a binding offer, and there are also multiple non-binding strong bids that have come in from marquee domestic as well as global investors and family offices. The board, of course, would have taken this on record, but it hasn't clearly, done anything further with that offer. Are you a bit disappointed, to not hear more on this front?
No, so I think we are definitely going to hear from the man on the con call in a short while. I think they are going to open the call with this particular thing. And if you have seen the exchange release yesterday, what it basically says is they have received a binding offer of $1.2 billion, and they are continuing to work with other investors. So the sense one gets is possibly this whole capital infusion that will happen at this point of time is actually going to be much bigger than $1.2 billion. So I think, but yeah, I mean, a clarification from the management would be, necessary, and we will, get to know the exact contours of the same on the conference call.
Oh, thanks, Ravikant. Well, while we are awaiting, that conference call to start at 5:30 p.m., Lalita, any closing comments from you? What will you be watching out for from the management?
Clearly, I think the capital infusion and the outlook on asset quality, these are the two most important things that we would be looking at. So, apart from that, these two are very, very crucial at this point of time.
All right, Lalitab and Ravikant, both of you, thank you very much for giving us your time and helping us analyze Yes Bank's second quarter numbers. A loss of 600 crores for the second quarter on the back of a larger tax outgo, but the big surprise coming in the form of asset quality worsening. 6,000 crores of slippages, gross NPA, net NPA, both of those ratios worsening. No further comments from Yes Bank on this, investor from which they've received a binding offer to be able to raise $1.2 billion. Abhishek, will you quickly like to wrap up, with any further thoughts on the numbers?
Largely in line set of numbers, apart from the fact we don't know watch list and we don't know the BB and below rated book. If at all they show improvement over there and they say that the slippages or formation of bad loans are, largely from these painful books, then the results are more or less in line with what the street was anticipating.
All right, Abhishek, thanks very much for joining in with your take as well. Let's take a short break on that note, but don't go anywhere. We'll be right back with more news and updates.